Welcome to She Sees Profit, the channel where we break down trading concepts with clarity, confidence, and intention. No hype, no confusion, just understanding how the market actually moves so that you can trade smarter, not harder. Let's talk about volume and why sometimes the market moves fast and other times it feels like nothing is happening at all. Picture a large shopping mall on a random weekday morning. The doors are open, a few people are walking around. Some are browsing, some step into the store, but most aren't buying anything significant. That's what the market looks like during low volume and consolidation. Retail traders are active, placing small trades, going back and forth, but there's no urgency. Price moves slowly, stays in a tight range, and feels indecisive. Nothing is wrong with the market, it's just quiet. And here's the key part: the big spenders aren't there. Banks, hedge funds, and large institutions, the ones that actually move price, haven't stepped in yet. So the market drifts, consolidates, and waits. Just like that mall, the market is open, but without big money, nothing major happens. Now, imagine that same mall on Black Friday. Parking lots are full, lines are wrapped around the building, security is on high alert, employees are rushing, money is moving everywhere. That's high market volume. This is what happens when banks and institutions enter the market with size. Orders are large, participation spikes, price moves fast, and with direction. And just like Black Friday doesn't happen randomly, high volume in the market doesn't either. It usually shows up because a major news event hits, economic data is released, or institutions decide it's time to execute their positions. That urgency pulls everyone in at once, and price finally goes somewhere. This is when trends form. This is when momentum appears. This is when traders see opportunity. Low volume is the market waiting. High volume is the market deciding. And once you learn to recognize the difference, you stop forcing trades and start trading with clarity. This is why it's so important to study the instrument you want to trade so that you can recognize when high volume normally occurs and you're not trading at a time that is not optimal for that instrument. I'm going to show you how you can perform a very simple chart study to determine the best times to trade so that you can also identify when to stay out of the market. That said, let's hop on the chart. All right, guys, so we're on the chart. This is NAS 100. However, this particular strategy works with any instrument that you want to trade. I am a futures trader, so I do trade NQ, which is the equivalent of NAS for the futures platform. However, again, this does work for any instrument that you want to trade. Okay, so I'm going to keep this simple. I'm just going to provide you with a couple of examples. What you're looking for is areas on the chart where price moves quickly in one direction or another. Okay, so if you notice, I have two vertical lines on my chart to identify not only that price is moving, but the time as well. So for instance, this is 8 a.m. and this is 9 a.m. Now, there are other places on the chart, but I will tell you just by my research, I know that this instrument moves in New York session, usually around 7:30 a.m. Central, as well as 8:30 a.m. Central. Okay, so depending on where you are, just convert that for your time zone. But this is just based on my knowledge of my instrument. Okay, and it's very important that you do due diligence to understand your instrument. Okay, so I have this marked up. This is the 1 hour time frame, and I normally look for entries on the 15-minute or the 5 minute, just depends on what action that I see. And so we're going to drill down there. Okay, so keep in mind, this is on the 1 hour. Let's drop down to 15. Okay, so I'm going to zoom in just a little bit. Okay. Now, this is the 15-minute. Now, notice on the 1 hour, it showed the straight drop. However, now that we're on a smaller time frame, we can actually see that there was a little bit of consolidation before price actually started to move. Okay, so that is important to note on this. And what I like to do is I like to box this in just for my awareness so that I can understand, even though prices started to move down, where we may try to get chopped up. Okay, we don't want that. We want the smooth moves. Okay, so that's just a little note kind of help you understand. And so now I want to measure this because I want to show you you don't have to be greedy in the market. Okay. The point of this is, yes, financial freedom. It's also time freedom. Okay. We don't want to trade a 9 to 5 where we have to report and clock in for 8, 9, sometimes 12 or more hours to make whatever it is that you want to make, when you can come to the market and maybe you can make that or even more in a fraction of time. Guys, look, this is the 15-minute time frame. And for me personally, this would be the move. I'm looking for this 30-minute move. I'm out of the market. I've made what I need to make. And guess what? I'm on about my day. Okay. And so that's kind of one of the things I want to point out. Trading is not about greed, it's about steadily building your capital and moving on to enjoy life. Okay. So we're going to drop down to the 5-minute time. I'm going to look at that same area for you. Okay. So zoom in. Okay. So what do we see? We see that price went down 5, 10, 15. Okay. 20 minutes for this move. 20 minutes for this move. And you're out. Okay. Now let's go to the other example that I marked up with a horizontal line right here. We're going to zoom in on that. Okay. These are 2 opportunities or 1, depending on your experience. Okay. So this particular move, again, there's a lot of consolidation here. Depending on your experience, you might, this is something that you might mark up just as I did, but it is important to be aware of it. Okay. And again, I'm just going to measure out this move for you so you can understand. So this move here, this is what we're looking at in a short amount of time. Okay. 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55. This is 55 minutes. Okay. Well, yeah, 50 minutes of movement and you're out. Okay. It doesn't take long. Okay. Let's just say you only wanted this one. Let's just say you only wanted a piece. Okay. This is 5, 10, 15, 20 minutes and you're out. Let's just say you waited for the retest. The break in the retest, you got in here. Okay. That's the movement. Guys, it doesn't have to be complicated. This is what I want my students to know. Trading does not have to be complicated. Okay. This move right here can be someone's daily goal. This can be someone's daily goal. And it's not about greed, it's about getting in, getting the move, getting out, going on about your day. How would you feel if you can make your daily goal? And that's, again, that's different for everybody. Everybody has their own daily goal that they want to make in a day. But that differs based on your lot size or your contract size. You can make that amount in 20 minutes. You can make that amount in 15 minutes. And then you go on and you enjoy your day. These are the things that give you time freedom, financial freedom, if you can manage your greed. Okay. You don't have to take every trade of the day. Some people stay on the desk for 8 hours, just like they would on a 9 to 5. She Sees Profit is about teaching students to trade with clarity so that they can go on to enjoy their families, to enjoy their lives, to enjoy time freedom, location freedom, and financial freedom. So I hope this has been helpful for you. If you like this content, please be sure to like and subscribe. If there's something you would like me to cover, please drop a comment. I'd love to hear from you. Until then, This is She Sees Profit, wishing you profitable trading.
Trading doesn't have to be complicated. You just have to prepare for the move before the move. If you like this content, don't forget to like and subscribe.